Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Now, at first glance, Motilal Oswal Financial Services reported profits might make you nervous. The numbers have been on a wild ride, swinging from rupees 1300 crores in FY21 down to rupees 900 crores in FY23 before skyrocketing to an impressive rupees 2500 crores in FY25. Based on these headline figures, it's easy to dismiss the business as highly volatile, more like a roll of the dice than a serious investment. But here's the thing, if you dig a little deeper, you'll find these profit numbers are hiding a true compounding machine that has been firing on all cylinders. The key is to look past the accounting noise and find the core engine of growth. Now, the main culprit for this earnings roller coaster is Motilal Oswal's sizable investment book. You see, accounting rules require that all paper gains and losses on these investments must be routed through the P&L or the profit and loss statement. So when the markets have a great year like FY25, the P&L gets a huge boost from these mark-to-market gains. Conversely, in a weaker market, the P&L is dragged down by paper losses even if the actual operating business is doing perfectly well. This accounting volatility acts like a veil, hiding the powerful and consistent growth happening underneath. When you strip away these investment fluctuations and look solely at the operating profit pre-MTM, the true picture emerges. This core profitability generated from its actual financial services has been compounding at a stunning 32% CAGR from FY21 to FY25. It's a jump from a solid rupees 700 crore in FY21 to a robust rupees 2000 crores in FY25. This growth isn't coming from just one place. It's a synchronized surge across all its key divisions. Wealth and asset management. This segment is riding the massive structural wave of the financialization of savings in India. As more and more retail investors move from physical assets like gold and real estate to financial products like mutual funds and portfolios, Motilal Oswal is a direct beneficiary. Their strong brand and distribution network are capturing this trend perfectly. Capital markets or broking. While broking is a competitive space, the overall expansion of the investor base in India, millions of new demat accounts are opened each year, provides a powerful tailwind. The company has successfully leveraged technology and customer service to grow its franchisee. Housing finance. This arm has carved out a profitable niche, demonstrating healthy growth and contributing steadily to the overall earnings pie. In essence, internal execution is meeting powerful external tailwinds, creating a formidable growth combo. So, how do you value this two-part business? Well, given its structure, a simple P/E ratio on the net profit is misleading. A more accurate method is a sum of the parts valuation. You value the operating business, that is, you take the operating PAT and apply a reasonable P multiple. This will help you value the core business. Second, value the investment book. Now, the investment book of the company should be valued separately at its core market value minus a 20% to 30% holding discount. Adding these two parts together will help you arrive at a decent estimate of its intrinsic or fair value. Of course, no investment is without risk. A significant and prolonged market crash could temporarily derail both the sentiment and the MTM gains. However, we believe the financialization of savings is a secular long-term trend for India. Any market downturn would likely be a temporary setback in a much larger multi-year story. Now, I know that I did not give you my target price because I wanted to help you figure it out yourself. But I've shown you how to ignore that noise. I tried to give you a map and an X-ray vision tool to see the strong engine underneath a bumpy hood instead of just telling you the final destination. The real business, which is wealth broking and housing finance, is growing very fast and steadily. Now you can easily see the true value for yourself and figure out whether the risk reward of investing in the stock is in your favor at the current juncture. Well, that's all from me today. I'll see you again next time. Goodbye and happy investing.